Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. And today we have AGENUS on the slab, a company that's looking for a shot in the arm, financially speaking. We're diving into a proxy statement, and believe me, it's more exciting than it sounds. Well, maybe. AGENUS is holding its annual meeting in June of 2025, and they need your vote on a few key proposals. The big ask is to get more shares authorized for their equity incentive plan, basically giving them more stock to play with when compensating employees. They also want to refresh their directors' compensation plan and employee stock purchase plan. There's also a plan to exchange some older stock options for newer ones. Let's unpack what this all means. First, a quick rundown of what's on the agenda. We've got the election of directors, proposed changes to their equity plans, an advisory vote on executive pay, and always thrilling ratification of their accounting firm. It sounds pretty standard, but let's see what those changes mean. On the director front, they're asking you to vote for Brian Corvese and Timothy Wright. If your shares are held by a broker and you don't vote, those shares won't be counted for this proposal. Now let's get to the main event, the equity incentive plan. They want to increase the number of shares available by a whopping 7 million, bringing the total to 12.05 million. Plus, they want to extend the plan's life for another 10 years. They say this is critical to attract and keep talent, especially after some setbacks that impacted their stock price. Basically, they need more shares to keep their employees happy and motivated. In January 2024, the Compensation Committee granted options to purchase shares to Dr. O'Day and Ms. Cluskin for 10,000 and 6,250 shares respectively. Subject to vesting, Dr. Amin was also granted 108,000 shares under similar vesting terms, showing they're really incentivizing the top folks to stick around. They also mentioned that they try to target the 50th percentile for total compensation compared to their peers. This is a good strategy to retain talent while being careful with expenses. The total compensation strategy for these executives consists of base salary, target annual incentive bonus, and the grant date value of equity awards. For 2023, executives actually received their annual bonuses in the form of stock options rather than cash. And for 2024 annual bonuses, the review was postponed, meaning for now, no such payouts have been determined or paid to the named executive officers. Digging into the details, in 2024, Dr. Amin's base salary was around $715,000. Dr. O'Day's was about $594,000, and Ms. Cluskin's was close to $298,000. However, Dr. Amin took his salary in fully vested stock, which is a strong signal he believes in the company's future. Here's a quick look at the summary compensation table in terms of cash the named executive officers received. Dr. Amin received roughly 300K, Dr. O'Day received roughly 605K, and Ms. Cluskin received roughly 305K, all numbers in thousands. All other compensation is worth nothing. Just a quick scroll by to tell you there is also a policy prohibiting hedging and offsetting transactions. That means these top executives can't bet against the company's success, furthering align their interests with stockholders. AGENUS also needs more shares for their directors' deferred compensation plan and employee stock purchase plan. They are asking to increase shares for DDCP and ESPP by 25,000 and 50,000 respectively. I did notice that they have an ESG charter which outlines their commitment and process for environmental sustainability, social responsibility, and corporate governance. Then there's the option exchange program. Given that their stock has taken a hit, many existing stock options are underwater, meaning they're not worth exercising. To combat this, they're proposing to let employees swap those old options for new ones with a lower exercise price. All the shares from the old options will just be used for the new ones, and there will be no increase to the aggregate number of shares that may be granted. A vote for this essentially gives employees a fresh start. Lastly, they disclose the CEO pay ratio, which is the ratio of the CEO's pay to the median employee's pay. In 2024, AGENUS's CEO made about 32 times more than their median employee. But let's zoom in on the 2024 pay versus performance numbers. The PO made $3,717.1. You factor in the compensation actually paid, that number drops to about $25 million. the non-PEO's compensation averages about $722 million net loss. To get a feel, we can also compare this to the peer group return, which was $135 to the peer group return, which was $132 million net loss. To get a feel, we can also compare this to the peer group return, which was $135 in short. The top folks are still making a lot of money despite the company struggles and stock price issues. The Audit and Finance Committee signed off on the company's financial statements. So what's the verdict on AGENUS? Well, on one hand, they're facing some significant headwinds, setbacks, regulatory hurdles, and stock issues, and the board must resort to equity incentive for long-term growth, which means you'll be sharing your returns to your top executives and employees. I would definitely question whether leadership is good enough for their pay. AGENUS is a company that's trying to right the ship after some pretty big waves. So whether the company is a long-term pick is up to you to decide. That's it for today's Corporate Decoder. If you found this analysis helpful, remember to hit that like button, leave a comment and subscribe for more deep dives into the corporate world. Thanks for watching.